No, sir.
Shiva, Shiva, in your practice batch, I don't know which questions I've taken. Give me a moment. Today I'll be taking these questions. Have I taken question number 6 with you? If I've taken question number 6 with you, then you can skip this class. If you can, just recently, if you have taken. And question number 4. 6 and 4 I'll be taking, Shiva. So if you want to attend it, you can attend. Otherwise, you can skip. Nishi, good morning.
Good morning, sir.
Just give me a moment. Very good morning, everyone. So let us start with the next practice session on capital gain. So we were doing capital gain yesterday. So we'll be doing it today as well. And tomorrow we'll be doing some questions of past year questions of capital gain. So this is page number 3.473 of your study material. My screen is visible to everybody.
Yes, sir.
Good. Okay. So this is question number 6. Good question. It says, Mrs. Yuvika bought a vacant land of 80 lakh in May 2005. Okay, she bought a land. Registration and other expenses were 10% of the cost of the land. So when she has purchased it, she has actually incurred 10% registration or other expenses. Are these expenses on transfer? No. What are these? These are expenses at the time of purchase. So what do you think? What we should do about these expenses, guys? These expenses are at the time of purchase. Please tell me, what do you know about these expenses?
So we should add it to the cost of land.
Correct. So all the expenses which you incur at the time of purchase or acquisition, it becomes the cost of acquisition. So 10% is the expenses you have incurred at the time of purchase. So 10% is of 80 lakh is 8 lakh rupees. So actually your actual cost of acquisition will become 88 lakh, right? So these are not selling expenses. These are purchase expenses. Now, she constructed, correct Mohan, Lakshmi, correct, it would be added. She constructed a residential building on the said land for 100 lakh during the financial year 7 and 8. So she constructed a building. So we can say that it is an improvement now which is happening in the year 2007 and 8. So as of now, land was purchased, expenses incurred, total 88 lakh, and then there's an improvement also. Now, she entered into an agreement for sale of the above said residential house with Jauhar, not a relative, in April 2015. So in April 2015, she entered into an agreement that she will be selling this house. This is not 2025, this is 2015. Okay. The sale consideration was fixed at 700 lakh on 23rd of April 2015. So she was about to sell it for rupees 700 lakh to Johar. And Yuvika received 20 lakh as advance in cash by executing an agreement. So they executed an agreement. They actually undergone an agreement between each other, and they said that, okay, I'll be selling it to you for 700 lakh, for 7 crores. And they entered into an agreement, and she also received 20 lakh rupees in cash. What it is advance money, but it is in cash. Okay. However, due to failure on the part of Johar, the said negotiation could not materialize. So we cannot further go with this particular transaction, and it was lapsed. It was not materialized, and hence the amount of advance was forfeited by Mrs. Yuvika. So now 20 lakh rupees, either in cash or in monetary form, in banking form, doesn't matter. But this 20 lakh rupees has been forfeited. Please tell me in which year this amount is forfeited. Can you tell me in which year this amount is forfeited? Just this paragraph.
25, 20, 15, 16.
15, 16.
Everybody agree? So in here, somewhere over here, in 15, 16, she forfeited this amount. And now we know that what is the treatment of the amount which is forfeited. We have section 51 also, and we have IFOS also. So 51 we have of capital gain, and IFOS we have section 56, charging section of IFOS. And it says that if any advance money is forfeited, so let us revise the concept of advance money forfeited. Correct, Lakshmi, 15, 16, correct, Sugandha, Likita, correct. So let us quickly understand the concept of advance money forfeited. If you want to write with me, please write with me. Advance money forfeited. So it is very important that there is a date. There is a date which you should remember. One, can you tell me any? Can you tell me what is the date of that?
So 1/4/2014.
Correct. The date is 1st April. 1st April 2014. You have to remember this date. And just see that whether this advance money is forfeited before this date, or the advance money is forfeited on or after this date, even if it is on 1st April 2014 or after, on or after this date. So in our case, actually, it is on or after this date. It is in 2015. So you know that if it is forfeited on or after this date, so now at this point of time, there was a change in IFOS. So IFOS has said it. Now it will become the amount, it will be taxable income in the year of forfeiture. So it would be taxable under IFOS. It will become the IFOS income in the year of forfeiture. In the year of forfeiture, it will become the IFOS income, and no other treatment, no further treatment, no further treatment. That is, whenever you'll be selling it or any other thing you would be doing it, no further treatment. Just make it IFOS income in the year of forfeiture. So in our case, in this question, this amount is forfeited after this date. So it will become the income of 2015-16. Do we need to show this income here? See, now it depends at what is asked from us. Just see what is asked from us. Compute the income chargeable under the head capital gain. So compute the income chargeable under the head capital gain for Yuvika for assessment year 25-26. We are doing for the previous year 24-25, right? So this income, that advance money forfeited, is not the income of this assessment year. It has already became the income in 2015-16. So we don't have to add this in this year income, right? But yes, we have to tell to the examiner that this advance money forfeited of 20 lakh rupees, we will just show it a note. It would have become the income in 2014-15 or 15-16, whatever the year was. So in this year, we will not treat it. No further treatment in this year. Only in the year of forfeiture, this would become your IFOS income. Correct, Sugandha, correct, Mohan. Now, if it is before, if this advance money would have been before this date, then it does not become the income of the in the year of forfeiture. No treatment in the year of forfeiture. In the year of forfeiture, there is no treatment. Please don't make it your income, no income. However, on actual transfer of such asset, whenever this asset would be actually transferred. Actually transferred means I can say actually sold. So whenever it will be actually sold to somebody else, at that time, what we will do? Please tell me what you will do.
Reduce it from the cost of acquisition.
Correct. Very nice. It would be reduced from cost of acquisition. So at the time when I'll be selling it to third person, let's say, for example, first of all, it was, let's say I was the assessee, I was having a land or a building. I want to sell it to, let's say, Subiksha. So Subiksha entered into an agreement, but somehow Subiksha said, no, sir, I don't want to purchase it. So I forfeited the money. And let's say it was before this date, it was this area. I forfeited the money. So in that year, when I have forfeited, please don't do it anything. It would be my income in that year. No. But let's say now I'm selling it to someone. Let's say, for example, now I'm selling it to Shiva. So if I'm selling it to Shiva, so let's say I'm selling it for 1 crore. My full value of consideration would be 1 crore. But what would be my cost? My cost will be reduced from the amount which I have forfeited, then from Subiksha. So I believe that now you all are clear it, and mostly of all of you are clear on this advance money forfeited. Quite an important concept of capital gain. Coming back. So in this question, what we need to calculate? The capital gain income of this year. Now this paragraph is just telling me, this paragraph is not that relevant for me, but this paragraph is just the advance money forfeited. Now, let us understand the next paragraph. Ms. Yuvika again entered into an agreement on 1/5/2024 in this year. She again entered into an agreement for sale of the house at 810 lakh. Okay. She received 80 lakh as advance by RTGS. So she received 80 lakh rupees through real-time gross settlements, that is through banking mode. The stamp duty value on the date of agreement was 890 lakh. Okay. She's selling it for 810. But on that date, there she made an agreement actually. And at the time of agreement, the value was 890 of the stamp duty value. The sale deed was executed and registered on 14/7/24. See, we entered into the agreement in May 24, but eventually actually we are purchasing it. It is getting transferred to in our name on in 14 July 2024 for the agreed consideration. However, the stamp duty value had revised the values, and the value of the property and the stamp duty purpose was 900 lakh. So it's a classic case of that at the time of agreement, the stamp duty value was 890, and at the time of registration, the stamp duty value is 900. Please tell me, guys, there is a section 50C, real estate transaction. First of all, tell me, in 50C, we compare stamp duty value. Now, in this case, which stamp duty value is relevant for us? At the time of registration, 900 lakh, or at the time of agreement? Please tell me which stamp duty value is relevant for us. Since
agreement.
Why agreement? Correct. Why agreement? Because some advance was received, because we have an evidence. First of all, there is an evidence that there is an agreement. Second, there is an evidence that we have received. This was a genuine transaction. We have an evidence of the genuine transaction, sir. Actually, right now, although I am transferring this house here in July, but actually there is a prior date agreement, and I have a very genuine proof. The genuine proof is the banking mode. Account pay check, account pay bank draft, right? RTGS, NEFT, etc. Any banking mode. It should not be cash. If this would have been cash, then this value is not relevant for us. Agreement value is not relevant for us. Then only the registration date value is relevant. But it was through banking mode that some genuine transaction, we have an evidence. So it would be 890. Now this value is relevant for us. Now please apply your section 50C. What does 50C tells us? 50C tells us that if your stamp duty value is more than 110% of selling price, then we will take full value of consideration as stamp duty value. If stamp duty value is more than 110%, and if it is not more than or it is equal to, then we can take your actual selling price. So first of all, tell me what is the actual selling price over here. Everybody please tell me what is the actual selling price over here. How much we are selling?
810 lakhs.
So my actual selling price is 810. At my stamp duty value for this purpose, it is not 900, it would be 890. It would be 890 for this purpose. Now compare whether this 890 is more than 110% of the selling price. Is 890,
No, sir.
it's
No, sir.
890 is more than 110% of selling price 810. So the answer comes yes or no. The answer comes no. So in this case, the answer comes no, sir. It is not more than 110%. So the answer is no. In that case, my full value of consideration would be the stamp duty value or the actual selling price. Actual selling price. How much it would be? 810.
810.
So when I'll be computing my capital gain, my full value of consideration would be actual selling price 810. Okay. Subsequent to the sale, now she sold. Okay. First of all, tell me, she sold it before the budget or after the budget? We have the date 23rd of July 2024. So this particular transaction is we need to index it or we don't need to index it. So it depends that when we have actually sold it. So please tell me, what is the date of transfer? What is the date of transfer over here? Everybody tell me.
724.
Is it the date of agreement? It is the date of transfer, or 14 July 2024 is the date of transfer? The answer is that 14 July 2024 is the date of transfer. See, on this date, we have just entered into an agreement. Agreement date is relevant only for stamp duty value. That's it. See, whenever I want to sell my house, whenever I want to sell my land, and if I've just entered into an agreement and that person, the prospective buyer, has paid me just 1 lakh rupees. I want to sell my house for 100 lakh, 1 crore. And this person says, okay, sir, I will be purchasing your house and let us get into an agreement and I am paying 1 lakh rupees. Okay. So what can I say? If somebody will say, have you sold your house today? No. I have not sold my house today. Actually, I have entered into an agreement. My mind can change after 1 or 2 months. His mind can change after 1 or 2 months. So as of now, it is just an agreement. It does not mean that we have transferred the house. We transfer the house actually when we get all the money and then when we actually transfer the possession. So this is happening. The transfer date is this. It is not this. This is just agreement date. This agreement date is only relevant for the stamp duty purposes. That's it. Otherwise, the transfer date is 14 July 2024. And if it is 14 July 2024, please tell me, is it before budget, pre-budget or post-budget? It is pre-budget. So it is pre-budget. So in this case, indexation will also be done. Okay. Subsequent to sale, Yuvika made the following acquisition and investment. So after she sold it, what she is doing it, she has done some acquisition. Acquired 2 residential houses at Delhi and Chandigarh for rupees 130 lakh and 50 lakh respectively on this and this date. So she acquired Delhi house on 31st January 25 and Chandigarh house also on 15th May 2025. Before the due date of ROI, she has done it. Although she has for purchase, she has 1 year before, 2 years after. For construction, she has 3 years also. But she did it right now. Please tell me, they are referring to which particular exemption? So what she sold and what she is purchasing? What she has sold and what she is purchasing? Tell me.
He sold the residential house.
Correct. See, she sold residential house and she is purchasing residential house. So what is the exemption? Which exemption do we have in the 54 family which we can give it to her?
Section 54.
We can give
Yes,
section 54.
54.
Very good. 54 is available to individual or HUF. She is an individual. If you transfer your residential house property and if you purchase or construct your residential house, you are eligible for section 54. You are eligible for a section 54. Okay. My question is that if I am selling my one house, can I purchase 2 houses? Delhi and Chandigarh, she has purchased 2 houses. Can we do
Yes,
that?
sir. Once in lifetime.
Very
Inside
good.
India, we can purchase 2 houses.
Very
Within
good.
India, purchase.
Correct, Bala, Subheksha, correct. We can purchase 2 houses also. but that is only the option which is available once in a lifetime. Good. And second condition is that if your gross capital gain on your property or on this property, if the capital gain is up to 2 crores only, if it is up to 2 crores only, then only you have the facility that you can purchase 2 house. But if your capital gain on this house, if your capital gain on this house is more than 2 crores, then you will not get this facility. Understood? So there are actually 2 points over there. First of all, it is only a once in a lifetime decision. So if nothing is mentioned, we can take it. Assume that, okay, this is the once in a lifetime decision, he's taking it. But the second, which is more important point, is that the capital gain on this original one should not be more than 2 crores. Correct, Sugandha. Now, so we will see that how much would be it, how much would be the capital gain. If the capital gain is more than 2 crore, then only one house is eligible. So tell me, for the benefit of the assessee, which house you will take, Delhi house or Chandigarh house? Delhi house is 130, Chandigarh house is 50. Tell me, if let's say, if it is up till 2 crore, then both we can take. But if it is more than 2 crore, correct, we will take only the Delhi house. Why? Because here he or she can take more exemption. So will be able to benefit that assessee more. Second, acquired a residential house at UK for 180 lakh on 23rd 3 2025. She's acquiring the third house also. So can she acquire this? The answer is now it is of 180 lakh. Please tell me now which house you will take. If you want to take one house, Delhi house, Chandigarh house, or UK, London house.
So that is outside India. We can't.
Very nice. Very nice. So some students will say, okay, sir, we'll take this exemption. This is the highest one. No. Section 54 specifically says that the new residential houses which you are purchasing or constructing, it should be in India. So this one we will not take. So this we can't take because it is outside India. That we will be mentioning it. Now, correct, Himaja. It should be in India. Third, subscribe to NHI capital bonds approved under section 54 EC. Although they have mentioned 54 EC, but otherwise if they would not have been mentioned, then we know that in 54 EC we can purchase some bonds, NHI, RECL, other notified. But please remember, for your examination purpose, NHAI, not NABARD, guys, not NABARD, NHAI or RECL. Okay. Please tell me, in 54 EC, can we take an exemption? What is the asset transferred and where we need to invest? We need to invest in bonds. What is the asset transferred? What should be the asset transferred in 54 EC?
Yes.
So anything.
54 EC, and you have to purchase bonds. You have to purchase bonds of NHAI, National Highway Authority of India, Rural Electric Corporation Limited, or other notified. Other notified you can skip. For examination purpose, please remember NHI or RECL. Now, in 54 EC, what is the asset which you have transferred? The asset should be only any land, or it could be building, or both. It could be land, building, or both. That's it. Nothing else. Why it is not working? Give me a moment. Land or building or both, right? So if you are selling your land or building or both, then only you can actually purchase, you can take the exemption of 54 EC. But if you are selling any other asset, 54 EC is not there. 54F is there. 54F is there. In 54F, they say that you can actually transfer any asset other than residential house. Here in 54F, you can transfer gold. 54F, you can transfer land. You can 54F, you can transfer shares. But here in 54F, you have to purchase only and only residential house. Construct or purchase residential house. And 54 exemption is also formula-based exemption. Do you remember? It was also formula-based exemption. So in this case, 54 EC can also be allowed because land and building is transferred. But tell me, guys, what is the maximum amount of exemption we can take in 54 EC? 50 lakh. And that too, how much, what is the time limit we get to invest?
6 months.
Within 6 months. Within 6 months. So what is within 6 months? The transfer took place on 14 July 2024. So if it is 14 July, so within 6 months, somewhere in December, it will come. So up till that date, you can actually purchase your bonds. Let's just see. So he has purchased a bonds of 50 lakh rupees on 30th 11 2024. 30th 11 2024, I presume that this is coming within 6 months. And 40 lakh she has purchased on 9 1 2025. So I believe it is going after 6 months. Is it? July, August, September, October, November, December, January. No, actually it is also coming within 6 months only. If you calculate from 14th July, is when is my 6 months ending? 14 July 2024.
13th Jan 2025.
My 6 months is ending on 13th of January 2025. Okay, this is my 6 months which is ending on this date. So actually I have, this assessee has made an investment within 6 months. This also within 6 months, this also within 6 months. So both are eligible. 50 and 40, 90 is the total investment she has made within 6 months. But we know that there is a maximum limit of 50 lakh rupees. Compute the income chargeable in the head capital gain for your vicar. The choice of exemption must be in the manner most beneficial to the assessee. So that is the reason why they are giving this statement that you have to choose that one which will give the maximum benefit. So if we have to choose between Delhi and Chandigarh, we should choose Delhi because it will give maximum benefit to the assessee. Now, let us do this question. This is question number 6. Everyone with me. Computation of capital gains of Mrs. Yuvika This is assessment year 25-26. Now, the full value of consideration is what we are selling. We are selling a residential house now. Earlier it was land, then we constructed a building also. Now it is a residential house. So full value of consideration how much we will take. We know that we have discussed that we will take the actual selling price, but why we are taking it? So here we have to mention stamp duty value is not more than 110% of selling price. And we have to also show to the examiner that which stamp duty value we are comparing with. Stamp duty value of agreement date is relevant as some advance money is received through RTGS or through banking mode, you can say. Here it was RTGS. So you can say that the stamp duty value of the agreement date is relevant, not the registration date. And since 890 lakh is not more than 810 lakh, so therefore we are taking this as 810 lakh.
So more than 110% of 810 lakh.
We have not added 10% of why we will be adding in the selling price. 10% will be adding the cost price, na?
No, sir. There you written only 810 lakh. It should be 110% of 810 lakh, right? Last line, sir.
Last line.
891 lakh it's coming, sir. 110
Okay.
of it.
Give me a moment. What was it? I'm selling it for 810 and it was 890. 890. Okay. I have not written this, na? 110 lakh of 810 lakh. Correct. This 110% I have not missed. Okay. Less. Cost of acquisition. Please tell me cost of acquisition or index cost of acquisition. Index cost of acquisition. Why? Because it is transferred before 23rd of July 2024. Had it been after this date, there would have been no indexation. But in this case, there would be indexation as well. So how much would be the indexation? CI of the year of transfer. So in this year, we have transferred it. So in this year, the CI for this year, we understand it is 363. It is also given to us. And the year when we have acquired it. So we have acquired it over here in 2005 and 6. 117. Okay. So index cost of acquisition would be CI of the year of transfer 363 divided by 117 into cost of acquisition. So we have acquired it at the cost of 80 lakh
88 lakh.
plus 10% was the at the time of acquisition we have incurred this expenses. So 10% also will be adding. So it would be 88 lakh. So now it would be 80 plus 10%, 88 lakh. So it would be 363 divided by 117 into
273 lakh 2,564.
Yes,
It
sir.
is-
273 lakh 2,564.
correct. Very nice. So this is the index cost of acquisition. We'll be subtracting it from the selling price. Then it would be second,
Index
the cost of
improvement.
improvement also. Index cost of improvement because we have incurred on building also. What is the formula? CI of the year of transfer 363 divided by CI of the year of improvement. So improvement we have done in the year. How much improvement we have done? We have done 100 lakh rupees of improvement in 2007 and 8. So 7 and 8 CI, it would be given to you in the question. It was 129. So 100 lakh we have done the improvement. 129 na? Yes. 129 into 100 lakh.
281 lakh 39,534.
Correct.
535.
Correct. 281 lakh 39,535 you can take. This is the index cost of improvement. Is there any expenses on transfer? I don't think that there were any expenses on transfer.
That was so.
There,
150.
I don't think. No. There were no expenses on transfer. So my capital gain is coming as
Sir, in the last line, Mr. Yuvika paid 1% as brokerage on sale of constitution pieces.
is it?
Yes, sir. Because
Oh, I'm
after
missing
90.
this one. Correct. So Mrs. Yuvika paid 1% brokerage on the sale consideration received. Correct. So expenses on transfer were 1% of the selling price, 1% of the actual selling price, and the actual selling price was 810 lakh. It would be 8 lakh 10,000. This was the expenses on transfer. Correct, Mohan. I rectified it. 1% brokerage was also there. Now, Is it 2 crore 47 lakh 47,901? Let me know my calculations. 247,47,901.
Correct, sir.
Okay. So this is coming as capital gain, and that to long term, but it is gross long term capital gain. Why I'm saying it gross? Because we will be taking an exemption out of it. Now, please tell me, now my capital gain is coming as more than 2 crore. Since it is more than 2 crore, we can purchase only one house. So to take the benefit out of it, UK house obviously will not consider, but out of Delhi and Chandigarh, we'll consider Delhi house less. Exemption under section 54. Case if you don't remember the section number, so you can just write exemption in your examination. But I would highly request you for capital gain, section 54 series, you should remember. There are only 4-5 sections now. 54, 54B for agriculture land, 54 EC, investment in bonds, 54F, when you actually sell any long-term asset other than residential house and you purchase or construct residential house. 54D is not that important, but at least these sections you should remember with numbers. In case you forgot the section number, then at least write exemption. So how much is the exemption under section 54A?
Sir, I have doubts, sir.
Yes, please.
Can we do first the exemption under section 54 AC? Then our capital gain comes under below 2 crore. Then can we claim for 2 crores?
Okay. So Bala is saying, sir, can we give exemption under section 54 EC first, and our capital gain will be reduced less than 2 crores, and then can we take 54 exemption? The answer is no. The answer is no, because the section 54 says that before taking any exemptions, your capital gain should not be more than 2 crores. So we cannot do this manipulation. So don't try to trick the assessing officer. No, in this case, they are very clear over here that before claiming exemptions, it should be more than, if it is up till 2 crore, then only you can go ahead with 2 houses. Okay. Exemption under section 54. So it would be gross long-term capital gain. B, amount invested. C would be rupees 10 crore. 10 crore is the fixed limit, remember? So 10 crore is the fixed limit. So gross capital gain is 2 crore 47 lakh 47,901. Amount invested is, we'll take the Delhi house, 130 lakh. And we will actually tell the examiner that why we are taking only the Delhi house, or 10 crores, whichever is lower. So it would be 130 lakh. This is the exemption. This will show the note also. By way of note, if we don't have a space over here, so we'll show the note why we are taking 130 lakh. Because that also, if you will not show this, your 1 mark can be deducted over here. So let's again we'll give an exemption under section 54 EC. What is 54 EC? 54 EC is gross capital gain. And how much is the capital gain now? 2 crore 47 lakh? No. See, we have already taken this exemption. We have already taken this exemption. So my here the capital gain will become 1 crore 17 lakh 47,901 gross capital gain. B, amount invested in bonds. Amount in bonds up till 6 months. So 6 months. So in this case, we have invested both. We have invested twice, and that too within 6 months. So we can take that total 50 lakh plus 40 lakh, 90 lakh. So 90 lakh we have invested within 6 months. And thereafter, there is a limit of 50 lakh rupees. There is a limit of 50 lakh rupees. So C, 50 lakh fixed limit. Whichever is lower, you will take 50 lakh. You will take 50 lakh over here. And your capital gain will be
67 lakh 47,000 and
67 lakh 47,901. This is actually, I am running short of space. This is long-term capital gain. This is your long-term capital gain, 67,47,901. And regarding this note, you have to tell the examiner. Have you done till here?
Yes, sir.
Okay. Now, in this case, note, you have to tell the examiner since the capital gain was more than rupees 2 crore, therefore, assessee can invest only in one house within India. Within India. So he can invest only one house within India. Therefore, Delhi house is considered. Done?
Yes, sir.
Okay.
So you also have to give note of the IFOS.
Yes. Yes, because the examiner has given you a complete paragraph on it. So you have to tell them that why you have not taken that into consideration. Very nice. You have to give the note of that also in 1 or 2 lines maximum. So there, the advance money was forfeited on 23rd 4 2015. So we can say, if we are not mentioning the date, at least the year we can mention that the advance money forfeited in previous year 2015-16 will be taxable as IFOS in that year. That is previous year 15-16 or assessment year 16-17. So
Sir,
you
I have a doubt, sir.
Yes, please.
So for the STV, like we should take the STV on the agreement date if the advance money is paid in cash.
Correct.
But if there is forfeiture, it doesn't matter if it's cash or bank. If there is forfeiture, anyways will make it IFOS or
Correct.
Section 51 will be applied.
Correct. See, whenever you forfeited the amount, now the assessing officer is more concerned with the income. So whether you have received this income in cash or through banking mode does not make any difference. And anyways, you have done IFOS chapter also gifts. When you receive cash gifts also, that is also taxable, na? So the same way,
Yes.
it will also be taxable. Understood?
Understood, sir.
Good question. Okay, let us come to another question. Can we proceed to another question now? My YouTube
Yes, sir.
students.
Yes,
Okay, hit the like button also. All the students who are there on the YouTube. Okay, now let us come to question number 4. this is also a good and important question from examination perspective. Mr. A is an individual carrying on a business. He's carrying a business. His stock and machinery were damaged and destroyed in a fire which occurred in December 2024. So his stock is destroyed, his machinery is destroyed. See, machinery is a capital asset. And if we understand, if any capital asset is get destroyed or destructed, and if we receive the insurance claim, then the capital gain arises there as well. But stock, whenever the stock is destroyed, stock is not a capital asset. Stock is our business inventory. So whenever we sell stock, normally, whenever we sell stock, it is our PGBP income, not capital gain income. Correct? So in case the stock gets destroyed, and if we are selling it, or in case we are getting the money from the insurance company as an insurance claim, will that be a capital gain or a PGBP income? Everybody tell me. So this would be a PGBP income. So on the damage of stock, capital gain can't be there, because the definition of capital asset specifically tells us that the capital asset does not include stock in trade. So on stock in trade, PGBP income, and on machinery, there might be capital gain. So why I'm saying might be, we'll see. Okay. The value of the stock lost was 6,50,000. So the stock value was 6,50,000, cost of the stock was 650, and it got damaged. Certain portion of the machinery could be salvaged. So whether entire machinery is damaged, no, they are saying that certain machinery could be saved. We have saved certain machinery. Okay. The opening balance of the block of as on 1/4/2024, that is last year balance after providing depreciation, is 10,80,000. So in other words, simply they can say that this is the opening value of the block of plant and machinery, 10,80,000. During the process of safeguarding machinery and in the firefighting operation, Mr. A lost his gold chain. So he also lost his gold chain and a diamond ring. And guys, you understand, gold chain, diamond rings, these are jewelry and these are capital asset. And he lost them, okay? Which was purchased in April 2005 for 1,20,000. So they have given the cost of acquisition of gold chain and diamond. It was 1,20,000 rupees, okay? The market value of these two items as on the date of fire was 1,80,000. The market value is this. Guys, market value, we don't need it. Why? Because let's say if we are receiving some amount regarding this gold chain or diamond, so whatever the amount which we receive from the insurance company, that is actually my full value of consideration, right? And my cost is this. So the market value will not make any sense. So this market value data is not relevant for us. Now, Mr. A received the following amount from the insurance company. He received towards loss of stock 4,80,000. We understand whatever he received, it will go in PGBP. This loss of stock is not capital gain, it will go in PGBP. Towards damage of the machinery, he received 6 lakh rupees. Towards damage of the machinery, machinery is a capital asset. We will see that will there be a capital gain or not. And towards gold chain and diamond ring, this is also a capital asset. This is also a capital asset. So he is receiving these things on stock. It will go in PGBP, and these two will be capital gains. You are requested to briefly comment on the tax treatment of the above three items under the provision of the Income Tax Act. So here, what the question is asking that we have to comment on the tax treatment of each of them. Okay, so how we should do? So let us first pick up stock and let us comment on that. Very important question from examination perspective. So this is solution number 4. So first we'll comment on loss of stock. Simply, what we will write? Stock is like you can say is not a capital asset. It is not a capital asset, and therefore capital gain will not arise on stock. Rather, it will be PGBP income. Rather, it will be PGBP income. And how much is the amount received? Amount received for stock. So for stock, we have received 4,80,000 and they have given to us that the cost of the stock was how much? 6,50,000. So we are receiving 480 and the cost was 650. So amount received for stock is 4,80,000 and the cost of stock was 6,50,000. So what it is?
Capital loss.
Oh,
PGBP loss.
it is 1,70,000. It is a PGBP loss. It is not a capital loss. It would be a PGBP
Yes, sir.
loss.
Understood, sir.
Okay. Good. So Manu, got it? Kishore, Nishi, Bala,
Got it, sir.
Smriti, everybody, Sugandha, Mohan, Lakshmi, everyone.
Yes, sir.
Yes, sir.
Okay, good. Himaja, question number 2. Sorry, the same question, part 2. So what about the machinery? Machinery is a capital asset. And we understand it is actually, machinery is a depreciable asset. So if you remember, no need to quote this in the examination, but if you remember that whenever there is a depreciable asset where we charge WDV method, and if we sell that particular asset, so we have a section, if anybody remember the section number, section 50. We have a section 50, which is equivalent to section 32 of depreciation of PGBP. So what does it tells us? That if this machinery is, or any part of the machinery is getting sold or transferred or destroyed, then there could be a capital gain under section 50. How we actually calculate it? We calculate the same way, the way we calculate depreciation. So the block value, this is the WDV of the block, the WDV of plant and machinery, or block of plant and machinery rather. And they have told us that this is a block of plant machinery and the opening value of the block is 10,80,000. Okay. So opening WDV of the block is 10 lakh 30 or 80,000. We understand that how we calculate additions during the year. Additions during the year. We have not added anything in this block, but less money received on sale or disposal. Less money received on sale or disposal. So whatever the money we have received. So how much we have received? We have received for machinery 6 lakh rupees. 6 lakh rupees we have received. Now, so 10,80,000 additions, there is no addition, but we have received some money out of it. Now, please tell me, now we are left with 4,80,000. Now this 4,80,000 would be my capital loss, or it would be the WDV for the next year. Now, because they have not mentioned, although they have given me an statement that some of the machinery is saved, which is giving me an indication that only part of the block is transferred. Only the part of the block is transferred. So in case if you assume, so it depends upon your assumption that only the part of the block is transferred, the part of the machinery is destroyed, and still we are continuing with the remaining machinery. In that case, if 4,80,000 would be the WDV at the end for charging depreciation. For charging depreciation, 4,80,000, and there would be no capital gain. No capital gain or loss. Nil. In that case, this would be the case. So if you are writing this, then you have to make an assumption. That assumption was that only part of machinery is destroyed and the assessee is continuing with remaining. So if you are giving this particular assumption, if your assumption is this, that only the part of the machinery is destroyed and the part of this machinery is still remaining. So if you are giving this assumption, guys, then the capital gain would be nil. And on 4,80,000, we have to charge depreciation. We will not charge depreciation over here because they have not asked it. But yes, on 480, we would have charged depreciation. But in case we take this assumption, you have to take only one, guys. You have to take only one. But in case the second, you take the second assumption. You take the second assumption that whatever the machinery is salvaged, whatever the machine we could save, that is also taken by the insurance company. So everything they are taking it and they are giving me compensation. So in that case, then WDV at the end for charging depreciation would be 0. And 4,80,000, which we are not able to recover, it will become our capital loss. So this would be the second assumption. So you have to give only one out of, you have to choose only one out of it in your examination, right? So whatever you feel like, you can choose that. So if you are going with the second alternative is that the salvaged machine is also taken by the insurance company. If you are assuming the salvaged machines are taken by insurance companies, so it means that the entire block is transferred. Now you are not left with any of the block. So in that case, there will be, yes, capital gain or capital loss. See, your machinery was how much of value? 1080. And how much you are recovering? Only 6 lakh. And they are taking everything away. They are just giving you 6 lakh rupees and your machinery, which is worth rupees 1080, which is going away. So is there a profit or there is a loss? There would be a loss. So there would be a capital loss. How much of rupees? 4,80,000. Can you tell me what is the nature of this capital loss? Long term or short term? Very good. We understand that these depreciable assets are always short term. So I've told you in classes that why it is also short term, because actually we subtract it from the current year value only. So that is the reason there will be a short term capital loss. Section 50 is always short term. So it depends upon which particular alternative you want to take. In your examination, take only one. In your examination, please take only one. Don't waste your time in taking both the assumption.
Sir, I have a question.
Yes, please.
In the first alternative, if we take the written down value as 4,80,000, it will be subject to depreciation, right? So we should add that with the PGBP. Like depreciation will be an allowable expense.
Yes, it would be an allowable expense. So in that case, let's say this machinery is generally the rate of plant machinery is 15%. So in that case, on 4,80,000, we'll be charging depreciation at a rate of 15%, which would be allowed in this year as a PGBP expense.
Okay, sir.
So you mentioned that also.
Which one, Bala?
That depreciation also.
The depreciation, we should mention it. Not really required. This is what examiner is actually expecting from you. But if you want to write depreciation also, you can write that. Not really required.
Okay, sir.
Okay. Now the third one. Third one is jewelry. That gold ring and etc. Na? Gold chain and diamond ring. Jewelry. Jewelry is a capital asset and it's not a depreciable, it's a normal asset. So how you will be computing it? There would be a capital gain. There would be a capital gain. How much? Full value of consideration. How much you are getting? 1,80,000 minus cost of acquisition or index cost of acquisition. Just see which date you will take, guys. Which date you will take. On which date this transfer is happening. This transfer is happening on which date? The date on which insurance company is giving you money or the date on which there was a destruction?
The date there was destruction.
Correct. The date of the fire, the date of the destruction, that is December 2024. So this is actually the date of transfer. This is actually the date of transfer, the date of destruction, December 2024. And since it is post-budget after July 2024, so this would be no indexation here. So in this case, 1,20,000 and he has purchased in 2005, but there would be no indexation minus cost of acquisition, 1,20,000. 1,20,000. So this would be 60,000 would be your long-term capital gain. So there will be long-term capital gain on that gold chain and diamond ring. This is what examiners are expecting from you. Everybody understood it. So we are keeping it till here today. And if you want to do homework, I can give you one question. Question number 7. You can take question number 7 as in homework. So if we have already done some, today we have done 2 questions. Yesterday we have done some 2 or 3 questions. And this one is 7th one. So if you will be able to do these things, so most of the actually concepts you are covering the concepts also, and you are getting the practice also. So actually these sessions will help you a lot. See, I'm not saying that you should depend only on these sessions. Somebody was asking, sir, should I do only these sessions? And I have not done any practice. See, what I should answer this. It's like that Virat Kohli is saying, Virat Kohli is going for a World Cup tournament and he's saying that, can I just practice for 2 or 3 matches? Will I be able to win the World Cup? So what I should say? I have no answer to that, right? But yes, the more you practice, the more confidence you gain. So these practice sessions will help you a lot. It will enhance your confidence. It will enhance your speed. It will enhance your grasping power, or whatever the concept which you are doing it, all the provisions you are reviving it. But if you will say that, sir, only these, I have not done anything. Actually, there is a student who asked me yesterday, sir, I have not done any practice, anything, nothing. I'm good at concepts, but I have not done the practice. See, how can you say that you're good at concepts? You might be good at concepts also, but the thing is that when you actually pick up the paper, when you actually pick up the question paper, and then you are writing, so are you able to write it or not? So if you are able to write it correctly, and that too in an examination environment in 3 hours, so then you can say that, yes, now I'm good in concepts. It's like that. I'll give to Sachin Tendulkar, I'll give Virat Kohli that this is the book, this is what you have to read it, that if the ball will come this way, offside or onside, you have to just strike it that way. If I'll just give it the manual to them, so it will not help now. So you have to practice also. So please keep on practicing. So these sessions will help you to enhance your concepts also and practice also. But yes, you have to, there is no substitute for hard work. You have to keep on practicing also apart from these sessions also. So at least whatever the homework which I'm giving it to you, please be regular in that as well. See you tomorrow at 7:30. Any doubt, please do ask me if you have anything. Any
No,
other
sir.
doubt? Bye bye. Take care. All the best. Do study. Bye. Take care and
Thank
enjoy
you,
also.
sir.
And enjoy also. It's not like
Thank
that.
you, sir.
It's not like that every time you're studying. Please take frequent breaks also. Make a good schedule for yourself. The students who are going for September examination, the students who are going for January examination also because January is also not that far now. So please make a proper schedule for yourself. Follow it regularly. Keep break times in between also. Take rest also little bit. Then again come to study. But you should be consistent with your studies. Thank you so much. Bye bye and take care.
Yes, thank you. Thank you, sir.
Thank you, sir.
Bye bye.
Thank you.